Welcome to Iron Financial. This is the place where we forge stronger portfolios by hammering through all the market weakness. Today, we are putting Ondas, that's ticker ONDS, right into the fire. Now, this company, they have a story that's big enough to build a fortress, a huge narrative about dominating the whole defense and autonomous system space. But you know us, we always have to ask the tough question. Are they building this fortress on solid bedrock, or is it just a pretty face, a facade built on quicksand? Because the numbers, wow, they are telling two completely different stories. On one hand, you've got this insane 629% revenue growth. On the other, losses that just keep getting bigger and bigger. So today, we're going to hammer out the truth.
Okay, let's get right to it. This is the whole story right here, the whole conflict in a nutshell. On one side, you've got the promise. That headline, it's the kind of thing that makes traders sit up straight. Sales surging 629% year over year. I mean, that's not just growth, that's hypergrowth. It's the kind of number that Wall Street absolutely loves, right? It's pure rocket fuel for the bull case. You see a number like that, and you can't help but think, man, this could be the one.
Whoa, hold on. Before you go strapping yourself into that rocket, let's take a deep breath and look at the other side of the coin. Because yeah, that top line number's flashy, but it can blind you. From the exact same report, you get the reality check. Q4 losses got even wider. So let me get this straight. They're bringing in cash with a fire hose, but they've got an even bigger hose out back just spraying that cash with gasoline and lighting a match. I mean, come on, this slide is the whole battle. Does that growth even matter if the financial hole you're digging just gets deeper every quarter? The real question isn't, are they growing? It's, is this a rocket ship actually going to the moon, or is it just burning a ton of fuel to make a lot of noise and hover a few inches off the launch pad?
You're absolutely right. That's the core tension. And to really get our arms around it, we have to start with the bull case. You can't just look at the risk. You've got to understand what the potential reward is that makes people take that risk. So for that, we're going to go straight to the source, the company's own architectural plans, their investor presentation. And look, let's be real clear about this. This isn't your average business plan. They're literally calling it a blueprint for dominance. They are telling the world they have the vision, they have the money, and they have the strategy to build something absolutely massive in the defense and security world. That's the story anyway. So let's do it. Let's walk through this blueprint piece by piece and really stress test how solid it is.
And yeah, that story, it starts right from the top, with the CEO himself. Now listen to the language Eric Brock is using here. This is what you have to pay attention to. He's not out here talking about selling a few more drones or some shiny new piece of tech. No, he's talking about expanding an operating model. He's saying the market needs a scaled provider. Now, those are corporate buzzwords, but what do they really mean? Scaled is the key. He's telling you the goal isn't to be some little boutique gadget shop. The ambition here is to become the entire platform, the foundation that the whole defense and security industry has to build on top of. That is a fortress mentality, coming straight from the top. And this quote, this is them laying the very first brick in that fortress wall. So, how do you justify such a huge vision? Well, you pick a huge battlefield, and that's exactly what they've done. We're talking about their total addressable market, their TAM, which is just Wall Street speak for how big is the pie they're trying to eat, and the answer, it's massive. We're talking tens of billions of dollars. When you add up their targets in defense, homeland security, all that critical infrastructure, you're getting to numbers like $40 billion. And listen, these aren't trendy, flash-in-the-pan markets we're talking about. These are government-funded, can't-fail, mission-critical sectors. They have gigantic budgets that don't just disappear when the economy gets a little shaky. Now, the bulls will tell you that the growth cycle, that S-curve you see when a new tech takes off, has already started. And the key driver? The military. The military is always the first one in, and they drag the rest of the commercial world along with them. And maybe the most important point here is that the bulls are screaming that the market is just completely sleeping on how ready their tech is right now. They think everyone else sees them laying bricks, but they believe they're already launching missiles.
Right, and they'll tell you this isn't just a dream, it's a very specific engineered battle plan. Just look at this timeline. Phase 1, which they say is basically done, was all about development. That was from 2021 to 2024. That was pouring the concrete, laying the rebar, just proving the tech and finding a market. They're saying, check, done. So now they say we're right in the middle of phase 2, service delivery. This is the period from now until 2026. This is where they have to do the heavy lifting. This is where they're supposed to be building the first dozen floors of the skyscraper, landing big, multi-year deals, and really proving they can scale. If, and it's a big if they can pull this off, they believe it triggers phase 3, the expansion flywheel, from 2027 onward. That's the promised land where growth just starts feeding itself and they take over the world. It's a very clean, methodical, engineering-style plan.
And this right here, this number, this is the whole point. This is the knockout punch for the bulls. This is what you get if that plan actually works. Management has gone on record. They've put a hard target out there for the end of that service delivery phase. They are projecting $170 to $180 million in revenue for 2026. Just let that sink in for a second. This isn't some pie-in-the-sky 2035 target. We're talking about roughly 2 years from now. That is an incredibly bold, almost audacious claim. They're basically telling the market, our blueprint isn't just a pretty picture. It's a financial forecast. And here it is. This one number is the bedrock of the entire bull case.
Sure, but a forecast is just a story about the future. And a bedrock made of stories can turn into sand really, really fast. Putting a number on a slide is easy. Hitting it is a completely different game.
Exactly. A bold forecast. Love the ambition. But here at Iron Financial, we don't just admire the architecture. We bring in the inspectors to stress test the foundation. It's time to stop looking at the pretty pictures of the future and take a hard, cold look at what's happening right now. Because for all the talk about a grand blueprint, you can't get away from the fact that it looks like they're trying to build it on top of a sinkhole. When you stop listening to the conference calls and start reading the actual financial statements, you see some really deep, really scary cracks in this foundation.
So this is what it all boils down to. The analyst just laid out this beautiful vision, right? This multi-stage plan to build a corporate fortress. It's ambitious, it's compelling. I get why people are excited. But my job is to be the guy on the other side of the trade, asking the questions that you should be asking. And the number one question is right here on the screen. Is this gorgeous blueprint actually being built on anything solid? Or are you getting suckered into buying a mansion that's being built on a company that's losing more and more money with every passing day?
Okay, let's cut through all the noise. Forget about flywheels and projections for just 1 minute. Let's look at the cold, hard, unavoidable fact from their latest Q4 report. The losses are getting bigger. They are widening. We're talking about a net loss of over $35 million in 1 quarter. This is not a company that's, slowly trimming the fat and getting closer to profitability as it grows. No, this is a company whose expenses are exploding even faster than its revenue. For an investor, that should be a 5-alarm fryer. That 629% revenue growth we started with, it loses a lot of its shine when you realize your losses are growing right there alongside it. This is the financial quicksand that could swallow the whole fortress before they even get the walls up.
And if you don't believe me, look at the picture. This chart says it all. This isn't a one-off bad quarter. This is a trend, and it is moving hard in the wrong direction. That bar on the left, that was the last quarter's loss. The bar on the right, the one that's a whole lot bigger, that's the loss this quarter. You don't need a PhD in finance to see what's happening here. The cash burn is accelerating, the hole is getting deeper, faster. So while the management team is pointing way up at the sky, talking about the skyscraper they're going to build in a couple years, we have to look down at the foundation, which isn't just shaky. It feels like it's actively crumbling under the weight of the company's own spending. Okay, that's a completely fair and absolutely critical point. A blueprint that ambitious needs master builders at the helm. So that's the next logical step. Let's look at the C-suite. Who are the architects drawing up these plans? And more importantly, are they the right people to actually build this thing? Do they have the chops to navigate this incredibly difficult phase where you have to turn a cash-burning machine into a profit-generating enterprise? Because right now, execution is everything. Talk is cheap. And look, when you just look at the resumes, on paper, they're heavy hitters, no question. You've got Eric Brock as CEO. He's not new to this game. He's a longtime entrepreneur and investor. He's the big picture guy, the strategist who can sell that vision to the street. Then you bring in Mark Green to run M&A. This guy's a veteran deal maker, spent decades in tech investment banking. His whole job is to take their pile of cash and buy their companies to grow faster. And then for your COO, you get Patrick Houston, a retired brigadier general from the U.S. Army. His entire life has been about one thing: disciplined operational execution under immense pressure. So on paper, it's a dream team, right? A visionary, a dealmaker, and an operator.
Nobody's going to argue with the resumes. They're gold-plated. But I have to come back to the core question here. Is it the right kind of experience for the job they have to do right now? Think about it. You've got an investor, a dealmaker, and a military leader. These guys are brilliant at setting a vision, buying companies, and moving troops and equipment. But turning a company that's lighting $35 million on fire every 3 months into a lean, mean, profitable machine, that's a different skill set. That takes a gritty, almost fanatical focus on the nickels and dimes, on margins, on operational efficiency. It's a difference between being the architect who designs the beautiful skyscraper and being the foreman on the ground who actually knows how to pour the concrete and weld the beams to get it built on schedule and under budget. I'm not sure they have that foreman in the executive suite who can stop the bleeding. And that, to me, is a huge unanswered question. And that exact question about execution, about stopping the bleeding, leads us right to the biggest X factor in this whole story. The one thing that can buy you time, hide your mistakes, and give you another chance to get it right? A gigantic pile of cash. Ondas has a massive war chest, and we have to analyze it. Is this the ultimate foundation that guarantees victory, or is it just a bigger pile of fuel for the fire? Let's be crystal clear on this number because it is staggering. Management estimates they had a cash balance of $1.5 billion at the end of last year. $1.5 billion. In a sector where a lot of their smaller rivals have total company valuations of less than $500 million, this is an incredible weapon. This cash is the steel reinforcement in their entire foundation. I mean, you just don't see balance sheets like this on companies at this stage of the game. It gives them a runway that's miles long. It gives them strategic flexibility. It lets them execute their plan without having to go back to Wall Street begging for more money every 6 months. You can't deny it. This is a huge, huge pillar of the bull thesis. And you have to understand this cash isn't just a defensive shield. It's an offensive weapon. It's a sword. Think about it. If you're the Department of Defense and you're about to sign a 10-year contract, what's the first thing you do? You look at the vendor's balance sheet. You need to know they're going to be around to support the product. Customers will always choose the well-funded company. Same goes for partners. Who are you going to build an ecosystem with? The company with $1 billion or the one living quarter to quarter? And maybe most importantly, in a war for talent, who gets the best engineers? The company that can promise stability and resources? That $1.5 billion is a competitive advantage that is almost impossible to overstate. It's an advantage. I won't argue that. It's a massive advantage. But $1.5 billion buys you a lot of time. Or it buys you a lot of rope to hang yourself with. And right now, it looks like they are busy breeding a very expensive noose. The size of the cash pile is only half the story. The other, more critical half is the question on this slide. What is the burn rate? We know they lost $35 million last quarter. If you annualize that, and that's assuming things don't get worse, you are burning through $140 million a year. At that speed, your $1.5 billion fortress suddenly looks like a 10-year countdown clock. It's not infinite. The size of your woodpile doesn't matter if you've got a forest fire on your hands. And this slide just lays out the whole tug-of-war perfectly. On one side, you have the asset, the reason the bulls are so excited, a massive cash balance that gives them a huge moat around their business. It's their strength, their margin for error. But on the other side, you have the risk, the reason the bears are circling. Those widening losses mean a high and maybe even accelerating cash burn, and they face enormous risks just trying to execute their plan and turn all that cash into actual sustainable profit. So here's the debate in a nutshell. Is that cash a powerful asset that secures their future, or is it a finite resource that's just being eaten away by a fundamentally unprofitable business? The answer to that is everything. It determines if this fortress ends up being built on a mountain of gold or a pile of ash.
All right, we've laid out the bull's blueprint. We've hammered on the bear's foundation. We've looked at the grand vision for the future. And we've stared into the ugly reality of the current profit and loss statement. So now it's time. Time to step back, weigh all the evidence, and deliver the iron financial verdict. This is where the rubber meets the road.
But before the final verdict, let's put it all on the ledger. One last look. On the bull side, the pillars are strong and clear. You've got a massive adjustable market in the tens of billions. You have a fortress of a balance sheet with $1.5 billion in cash. You have a clear, logical plan for growth. And you have those incredibly bold revenue projections that could create huge value.
But for every one of those pillars, there's a serious crack on the bear side of the ledger. That massive market doesn't matter if your Q4 losses are widening to $35 million. That huge balance sheet is being actively drained by a high cash burn. That clear growth plan has yet to prove it can generate a single penny of profit, and those bold projections are balanced by an equally high risk that they miss them completely. Even the experienced leadership comes with that big question mark. Is it the right kind of experience for this job? It's a perfect stalemate between massive potential and potentially catastrophic failure.
So here's our verdict. Ondas is the textbook definition of a high-risk, high-reward blueprint. This is not a stock for your retirement account. This is absolutely not a stock for the faint of heart. The potential upside, if, and I mean if, they can execute this plan and grab even a tiny piece of that massive market, it's huge. They could become an essential player in a critical industry. But the risks are every bit as huge. The cash burn is real and it's happening now. There's no clear line of sight to profitability yet, which means the foundation is not stable. So our verdict is this. This is an opportunity for disciplined investors only. And what we mean by disciplined is someone with a very high tolerance for risk and volatility, someone who has done their own homework, and someone who is willing to accept the very real possibility that this could go to zero in exchange for the lottery ticket chance that it could be a 10-bagger. This is not a buy and hold investment. Right now, it's a buy and watch very, very carefully investment. And in the end, that leaves all of us with the one question that truly matters. They have the architectural plans for a magnificent fortress. They have more than enough money to buy all the stone and steel they need. But the ground beneath them is shaking. The foundation is not just cracking, it feels like it's crumbling. So, will that foundation of $1.5 billion hold together long enough for them to actually build the fortress, or will the entire thing collapse into a sinkhole of its own making? That is the billion-dollar question that every single Ondas investor needs to answer for themselves. Thanks for joining us at Iron Financial.
Quick disclaimer, everything I share is for entertainment and informational purposes only. I'm not a financial advisor, so please do your own research or talk to a professional before making any moves with your money.